if you have your own banking system and it goes down, it's your and your customer's problem. But if you have a website on the internet and internet goes down, it's everybody's problem. Do you know how much did you pay? Do you know if what?
I don't care. Right? I trust them.
If you cannot care about how much are you paying,
I'm a nerd and I'm in this for the risk and whatever, right? I know what I'm doing, and yet I did not realize the extent to which things could go wrong.
With crypto, with blockchain, you can actually build services that nobody can lock you out of, and that's why we are promoting those technologies that are trustless, permissionless, open, permissible, and simply it allows a lot of things to be done. It allows people like Orest to experiment. This is the biggest unlock.
Hello, everyone. Hi, Orest. Hi, Krzysztof. Welcome to the French Tech Warsaw podcast. It's the first of the year. It's cold outside, -8 degrees, but luckily we're here in the warm with some French croissant and some coffee to discuss crypto, the crypto markets, with maybe a new approach that we will try today, which is basically to explain, thanks to you guys, experts with many years of experience in the market, to the general audience of ours, what crypto really is, what it means to work in crypto, what the ecosystem is bringing to the table, not only as a speculation, as an investment, as some would say, but also from a technical perspective. And so we'll maybe start with getting to know you guys a little bit more. I'll start with you, Krzysztof. If you could tell us basically who you are, introduce yourself, introduce L2Beat as well.
Yeah, so my name is Chris, and I work at L2Beat. And L2Beat is like what we call on-chain transparency platform and company. It is a niche, so we are providing on-chain transparency to the Ethereum L2 ecosystem. Maybe down the road we'll be able to explain more what does it mean. But in general, we are kind of like a rating agency that says which chains built on top of Ethereum are built in a proper way. And we are validating the claims of the projects, whether they actually implemented all the security guarantees that have to be there in order for the users to feel safe using the chain. And I'm responsible for partnerships and for governance at L2Beat.
Great. So I understand that, for instance, if an investor or a VC or some other type of funds would be interested in a project, they would look up at your platform to try to get a validation of a given project from an independent source, basically.
The way I pitch ourselves in a short way is that imagine that you put your money on this new chain, and all those chains are essentially startups. So you can find yourself in a situation where you put your money in this chain, and then, for example, you go into a legal dispute, which which makes it impossible for you to move this money for some time. And as all those chains are startups, the universal law of startups says that 90% of them will be gone 5 to 10 years from now, but you don't know which ones. So if you are in a position that you cannot move your funds while they are on this chain and the chain disappears, the question is, what do you have when your dispute settles and you finally can move your assets? And what we try to assess is whether you can feel safe because Ethereum got you covered, or actually if you have an issue. And like deep into our analysis, you can find what exactly should you be looking for, what exactly should you be monitoring to be able to know whether your funds are safe or not. In essence, like this is the like short description of what we actually do.
That's great. And you touched a little bit on Ethereum, and we'll be Ethereum focused today because, Orest, you're working on mainly on Ethereum as well. So if you could also please introduce yourself and tell a little bit more about T1 and what it is.
Of course. Thank you for having me, and great to be in this exquisite group. I am actually one of the subjects on L2Beat's platform. I'm representing a chain that is being built by my startup, which might be gone in 5 to 10 years. And so it's, I think, an interesting interplay to see the two perspectives. My personal background is in computer science, and I've previously worked at another startup building another L2, a zero-knowledge rollup, with the idea of scaling Ethereum. In Ethereum, we have this issue that you can only have so and so many transactions per second or so and so much traffic. And so we want to scale the ability to support more users, more use cases, without sacrificing the good, desirable properties. And rollups are one way, or L2s are one way of achieving that. And my previous employer was trying to fix just that with a new primitive of zero knowledge proofs. And now I'm trying to actually fix it with yet another primitive of trusted execution environments and zero knowledge proofs. This is what my startup T1 is trying to.
Great, great. That sounds really exciting. There is always behind, protocols and startups and processes, people. And so I'm interested in your experience and how you got into this world of crypto. If you could tell me a little bit your experience, what was the ignition and why did you decide to move into that space?
Maybe I will start. So before crypto, I used to work at the IT company, at the software house that was working with traditional finance. So I've spent a lot of time building, or I was a product manager. So interfacing between the developer team and the stakeholders on the software build for traditional finance. So I know how, I saw it firsthand, how complicated, how expensive and risky the traditional software is. And I've been interested in crypto for quite a long time. I had a friend who was very deep into Bitcoin. Unfortunately, I totally dismissed every time he wanted to get me involved in this. However, I was following closely the development of the space. And when I got hooked up was when I first saw the DAO, the original DAO. It was the first time when I realized, okay, this is interesting. This is not just money. This is actually a programmable money. Things that we can build, like actually infrastructure on which we can build primitives for finance, and we can build, in the future, financial rails for the future. And that's basically my vision. So, and I realized sometime around 2017 that it's inevitable. That simply the development of if you think about it, it's a no-brainer for financial institutions to at some point transition to blockchain technology and crypto rails. Simply, it's less cost, less risk, sharing risk especially. So this is what happened already, for example, with intranets and internet. Corporates were also hesitant to use the internet. They thought, I remember being in those discussions where guys in suits were telling us that no, serious companies cannot use this infrastructure built by some geeks, and you don't know who is there in the internet. Or then it was with open source. You cannot use a software that is built by some random geeks in the world. You need to know who is writing your software. And of course, they were wrong both times. So, and I'm betting that they are wrong. They used to be wrong 5 years ago when they were saying, hey, you cannot use this public blockchain because you don't know who is using them. You don't know who is transferring on this blockchain. Of course, the same, you don't know who is sending emails in the internet. But you can build on top of it things that you want. And by building on top of it, you are using infrastructure that is shared globally. You are using infrastructure that is common, it's public. So you don't have to worry about it. If you've got your own system and the system goes down, it's your problem. If you have your own banking system and it goes down, it's your and your customer's problem. But if you have a website on the internet and internet goes down, it's everybody's problem, right? Nobody tries to blame you if the internet goes down. You no longer share the risk of this going down, especially that it's not that often that it's going down. Also, you do not have to maintain the cost of supporting all of this because you don't maintain the internet, right? There are dedicated companies that do that, but you as a user, even the corporate user, you don't support, you don't have the cost of maintaining the internet. So that's the reason why I think that everything will move at some point to the crypto rails, which is the internet of value. And that's what, when you think about it, what those financial institutions are, they are not IT companies. The software component of those companies is not usually their unique advantage. What they are actually doing is they are providing value to the customer, or safety, or convenience, and they help the customers manage money. They don't care if they are doing this on their own servers or on somebody else's servers. We already seen that with all those companies going into cloud. Cloud is just other people's computers somewhere in the world. we can go another step forward, and instead of using corporate servers somewhere in the bunker in some weird place, we can use distributed systems. So this was my bet already 2016-17 for the future of finance, and here I am.
That's great. That's great. Let me follow up on just two elements that you mentioned that seem extremely interesting. You said that one of the elements that convinced you or maybe helped you to make the move full-time on crypto were DAOs. So maybe if you could tell us a little bit more about that for the general audience that may not know what it is. And also you mentioned a concept that is new to me, the Internet of Value. That's the expression, if you could also explain what you mean by that.
Yeah, so in the regular internet, it's a communication protocol. You can send messages through the internet. But in order to store some values, in order to store some state, as we call it, you need some external tools. Like the internet itself does not have the data ingrained in it. So that's what blockchain, and especially crypto like blockchain, is adding. That we can suddenly have this common infrastructure for saving some data. So, in crypto, the data that we are saving is balances of who owns what for a given coin, but it could be also different things. But this is simply, there is a product market fit for saving such a data. And yeah, this is what blockchain really changes. It's a common infrastructure to share common state of what we all together agree on what happened in this network, and on what changes were actually accepted and approved in this network. So on top of that, we can build everything. We can build money, as we already did, or like we can build assets, as we already did. We can build all kinds of different stuff. Like you can imagine items in games to be used. Like this was an original concept from years ago, which never caught interest until now, but at some point will probably will. So yeah, so this is simply, you can think about crypto and blockchain technology as simply like another version of the network that is permissionless, trustless, public, open, and because of that, you can actually use it. Because of that, you are not afraid that somebody will decide that, hey, like you can no longer use it because we don't like you, which will be a growing issue in my opinion, especially with the isolationist that is happening right now. But imagine like if you were cut off from Uber, if you offend a taxi driver, you no longer ride with this taxi driver. If you offend Uber, you can no longer ride Uber anywhere in the world. Suddenly you lost access to it in New York, in Warsaw, in Paris, in Belgium, everywhere. So, and that's because like there is like this one corporate that decides whether you can ride Uber or not, and nobody can build on top of it. But with crypto, with blockchain, we can actually build services that nobody can lock you out of, and that's why we are promoting those technologies that are trustless, permissionless, open, permissible. In my opinion, this is a big unlock for what can be built on top of it.
Orest, what got you hooked?
I would view myself as a nerd, as a geek, one of those guys maybe into building those like crazy projects at home. And I was a nerd as a kid and teenager, and played around with Linux and open source software, and liked a lot this original Unix philosophy of having highly specialized command line interface tools to do a job where you can pipe the output of the first command line interface tool into the input of the second one, and this way compose a complex workflow and reflect like a real world situation with a set of specialized modules. And so because of that, and also because of my interest in freedom, I was of course following Bitcoin from some time ago already, but always on the side. And so I have a nice parallel, I guess, to Krzysztof, that was also, in fact, a friend of mine, or in my situation, my co-founder, who basically made me look at crypto. because we had founded this first startup of ours some 10, 11 years ago, trying to help people with digestive disease. It was a completely non-crypto related startup. And then some of our early engineers, nerds again, made my co-founder and me look at ICOs and Ethereum, etc., in more depth. And then actually my co-founder ended up, we both ended up leaving that startup of ours. And he ended up moving to the Ethereum Foundation to work on scaling Ethereum as this layer one, we call it, chain. This was before rollups were a thing. And I went on to found another startup, but he kept bothering me about crypto actually being valuable and interesting and not just a nerd's thing, but a reality, and specifically about zero knowledge proofs, no longer being this theoretical physicists or the theoretical mathematicians' wet dream, but something that provided tangible benefits and was in the engineering stage rather than in this theoretical ideation stage. And so it was him who, in the end, convinced me to start working on crypto professionally. And that's why I joined Scroll, the ZK rollup. From there, the cascade unfolded basically, and I was hooked into all sorts of different things. And in particular, realized that ZK has the limits as well. And so I wanted to try a more pragmatic approach.
I can add to this, because in my opinion, this actually presents the biggest value of crypto as being this permissionless, trustless infrastructure, because of those values, Orest could experiment with it. You don't hear about young, passionate, ambitious guys experimenting with some banking technology. Like the moment that I was hooked into crypto, the moment I was convinced that, okay, this is actually something interesting, was I remember as it was yesterday. I was sitting with my friend in a coffee shop in Warsaw, and I asked him like, hey, why do you think it's interesting? Like, we have a pretty good financial infrastructure in Poland, in Europe in general. Like, why do you find it interesting? And he told me, imagine that you have a website and you want to collect money for some reason, whatever reason. You want to be able for people to give you money. So what do? First of all, you need to go to the bank and you need to ask for their permission to open an account. You will probably wait like from days to weeks before you will be accepted that you are good enough to have this bank account. Then, in order to be able to put a button on your website that allows people to pay you, you need to go to some other company that is a interface between some payment solution that the customers are using and some payment solution that the bank is using, for them to accept you, that you can actually have this button that allows for payments. This will and I've been integrating such solutions in the past. So I know that at least like 15 years ago, it took like 2 weeks for just formalities to just, sign an agreement that allowed you to get access to the infrastructure that allows you to try to implement this button. So in order to get a button that allows anybody in the world to pay me 10 zlotys, I need to go through many different intermediaries who need to accept me, and they can, every time they can say that I'm not good enough. That, for example, I don't know, I'm too young. I don't have a financial history. I need to establish a company somewhere else because they don't like the way the place where I'm doing my business. And in crypto, at that point, it was easy. Like, you put your wallet address on your website and you tell people send money there. That's it. That's how much work it's needed for somebody to do the same button with crypto. And when you think about it, like, you can also build a lot of stuff on top of it, because just sending money is not that interesting. But when you can build things on top of it, and we have a lot of them right now, but 7 years ago, we had to imagine all of this. But lending protocols, I think that the biggest, one of the best revolutions is AMMs, like automated market makers. The idea that I can swap money with a protocol, not with other people, is it's brilliant. But I've been doing a lot of workshops with lawyers, for example, or executives in financial institutions. And at some point, I took an approach that I made them code crypto using templates. Of course, they were just copy pasting code into the compiler, but they were building their own token And that was already when they thought, okay, this is interesting. I just created a token. I sent some of my tokens to my friend. This is nice. But the moment when we created permissionless escrow, where they didn't need third party in order for them to make sure that they can exchange one token for another and nobody can cheat and nobody can, rug the other one because it's protected by the code, you could literally see the light bulb over their head. Suddenly they realize, okay, so this is what you mean permissionless. This is what you mean that this is automated and programmable and it's actually guaranteed by code. So now we can discuss more complicated stuff like DeFi, like all the security guarantees.
I think this is an interesting way of thinking, and I'm glad Chris finally brings up a parallel that I've been having in mind, that my wife criticizes me for not being intuitive to newcomers, but I think it actually is very precise. And that for me, a blockchain is a way to establish a shared view of the world. So it's a way for parties that might not know and not trust each other to somehow come to consensus about how they view something, how they view, in fact, everything around them. And this could be viewing how much money the different parties have. But it could also be viewing what the rules are. So, for instance, the rules for this smart contract, we call it, that just happens to be a system that will accept 17 tokens and send them back a day later, for instance, right? So just having this shared view of the world and those ingredients in it are, I think, this very magical, interesting source that makes for composability, that makes for the ability of taking the different ingredients and putting them together in different ways.
Yeah, it's counterintuitive for regular people to grasp like how brilliant it is, because like for them, the technology just works. They don't know what is behind the scene, what is under the hood of when you send money to somebody else. But they know that when you send money if I send money from one bank to another, even if it's my account in both banks, it takes anything from a few hours to a few days. If I send money to a person abroad, or even to my own account abroad, suddenly it's like days, and it costs a lot, and we take it for granted. Like it's normal. Like surely somebody has to do some work to validate it. And actually, the way that the traditional systems work, it's crazy, because these systems were created 30 years ago, and they are still operating, using the same technology or the same principles that we had not even 30. It was 30 when I was young. It's 50 now. It's 50 years ago when those systems were created and designed, and those design principles are still there. So what crypto is doing as well is it's kind of reimagining this from the scratch. And I like when I was thinking like how to, because like there is a question that we have somewhere there, like what does it change? What does crypto change? What does it allow? Like how does it make it different? And to be honest, like okay, there is a lot of things that it allows and makes different, but the on the surface it does exactly the same. However, my example is like I remember when I was first at the TV studio. It was like almost more than 30 years ago. And I remember how the studio looked like. There were like those huge cameras, a lot of different devices, a lot of cables. And look what we have now. Like, the cameras are like phones. They are small. Of course, these are not the same cameras, but they allow you, you wouldn't be able to have a professional TV studio here, the one that I used to record in more than 30 years ago, because regular people didn't have access to it. But suddenly, with this new technology, is it the same? Like, is my camera in iPhone the same as the professional camera that they are using in the TV studio, on Voronezha? Of course not. But does it solve my problem? Do I need this professional camera? Of course not. Like, I can record my son, playing with his friends with this camera. I can record a podcast. I can record, anything, even on a quite professional level. So I don't need this whole fancy stuff that they need in order to get my job done. And that's the same way with crypto. Like with crypto, of course, crypto is not the same as traditional financial rails. It is different. It doesn't provide you the same security guarantees. You are your own custodian, so you have to know what you are doing. But it allows for a lot of things to be done easily and simply it allows a lot of things to be done. It allows people like Orest to experiment. He doesn't need to be employed in a huge bank in order to be able to try to experiment how we can move data, financial data across the world. And this is the biggest unlock. 20 years ago, when we were building open source, almost 30 years ago right now, when we were building open source, everybody was thinking, hey, we will destroy Microsoft, we'll destroy all those IBMs of the world. I remember on the Hacker Festival, late 90s, there was a tombstone for Bill Gates with the inscription, where do you want to go today? So everybody was like, we were abolishing those IT behemoths. And 30 years forward, Microsoft owns GitHub, the biggest open source code repository. Microsoft invests a lot in open source, but it owns a lot of open source. The internet is controlled in a way by Google, Microsoft, Facebook. So all those corporates, they weren't abolished by open source. They transferred to open source. And that's the same way, unfortunately, I believe we will go with crypto. It's not that crypto will destroy banking system and traditional finance. No, traditional finance will, jump on this wagon, and they will be using this technology for their own purposes. That's my view.
That's a very interesting point. To come back to your analogy with the mobile phone that we use today, as compared to, or the camera as compared to what we used to use or what professionals use, and the analogy with traditional finance, if we may use that term, and DeFi and crypto. How do you see it going forward? How do you see it today from an adoption standpoint? Why is it, or is it a niche still, crypto, in terms of its use? Why is it not widely used by everyone, since it's so great? I'm being a little bit the devil's advocate, but it's just to bring some interesting arguments to the table. And how do you see it? How do you see the adoption evolving in the future?
Crypto has this cutting edge tech, but it's not the whole package, right? And so I remember this situation when I was kind of a libertarian, and the early days of Bitcoin. There was the leading exchange, Magic the Gathering exchange, Mt. Gox, and Kraken, and I was doing arbitrage between them. Mt. Gox was about to go bankrupt, which no one knew, but the price was more attractive. And so I remember having issued with my traditional German bank a transfer to my Mt. Gox deposit address of
Mt. Gox, sorry, just being an exchange, right?
Yes, and it's not a joke.
Trade.
Like the biggest Bitcoin exchange had pivoted to being a crypto exchange from being a playing cards exchange. Like this is like what sort of world we used to live in crypto terms. And so I issued this transfer to deposit some funds into Mt. Gox, and I see, it's pending. Okay, what's going on? Like I see this arbitrage opportunity, and it's like about to slip me. And then I wait and I refresh, and this evil banker guy with the big belly is sitting there lazy, smoking his cigar instead of pressing yes, confirm the outgoing transfer. And I'm so upset. And then finally, a few hours later, I receive an email, maybe even a phone call from the bank saying, hey, there's some issue with your transfer, we blocked it. Try again tomorrow, or talk to us tomorrow. And I'm like, damn. Like this was such a big opportunity. And just a few hours later, Mt. Gox announces insolvency, and I find out I would have lost all the money had the transfer gone through. And I think this shows the two sides of a permissioned system, or of a system where we do not have the custodian as the everyday like end user, but rather we have a professional banker who has like his risk team and whatever, has like data heuristics, whatever, about what's going on in the world, and can act and protect the user. And I'm not saying crypto is bad and banks are good. I'm saying there's very valid use cases where you don't want to be the custodian of your funds. And there's very valid use cases where not just the old COBOL tech where you need to hire retired professors to add a new feature is the asset that the bank has, but the whole picture, like the whole process.
Yeah, so I agree. Actually, I think that I see the future in which banks step in and provide the services that are providing right now to the customers, which is safety and some kind of a convenience of using finance using crypto rails. However, even in your example, first of all, of course, there are disasters in crypto, but it's not like that they aren't in traditional finance. We all watched Big Short, but even in Poland, we know a lot of there were a lot of cases where people's money were lost. Amber Gold, Get in Bank. There is a lot of cases where this traditional finance didn't work as well, because it doesn't magically solve all the issues, especially that it relies on people being honest. And one thing that we know about people is that honesty is not our best thing. So, however, even in your example, you said that okay, you made this transfer, and for some reason you don't know this reason, it was blocked. Like, why? It's your money. Like, of course, it's great that they are trying to protect you, but why aren't they telling you? Why are they stopping your money from going through? You should be able to say, okay, nice that you're worried about me. Nice that you're warning me. Now, please push this transfer forward. Like, I know what I'm doing. I want to make this transfer. Really, I see this arbitrage opportunity. If Mongox didn't explode, you would probably be pissed off that you didn't earn money at that day. And why is the bank actually in control of my funds? Like, why do they get to decide? Why don't I have a say? I'm absolutely for them providing me all those services that watching over me, but I actually be able to decide what I want to use and what not. Because if we don't have it like that, then this is something that we observe in crypto. Because there was no regulation in the in the regulatory environments that are known as good, we all went to regulatory environments that are crazy. That's why, open secret is that a lot of crypto companies are established on Cayman Island, BVI, all those exotic jurisdictions. It's not that those people want to launder money, or at least most of them do not want to launder money or do some crazy stuff. Simply, they are unable to establish themselves in, say, US, or at least they used to not be able, or in Poland. There's a lot of people who would like to do business in Poland, but simply it's too risky, and you don't have guardrails. But let me get back to your question of where are we and why isn't there this mainstream adoption? I think that's one of the reasons, because in terms of the tech, like if you ask me 5 years ago, I would say that hey, like we are not there yet because this is like just a proof of concept. We are just building this thing. It's not ready yet. However, today I would say that the tech is mostly ready, or at least it's ready to push it to the next level. However, in my opinion, the regulatory environment is not ready. The system is not ready. That's why you see much higher adoption in those places where the system is not working properly. So we went to Buenos Aires 2 months ago, and there, it's a different world there in Argentina, and crypto is very popular there. One of the reasons why it's very popular is because the banking system is not working that smoothly as ours. Of course, there are other reasons. However, from my personal experience, I tried withdrawing my funds from many different ATMs, like regular ones, like Santander, all the known ones, using 6 different cards that I own, or even more. My Polish and even international debit cards and credit cards. I failed at 3 different ATMs for some reason, and again, I try to withdraw my money and it just says not today, sorry. I have no idea why. But then, I tried to get to know like how do I get cash in this weird city, and apparently I was able to, just message someone that came on a scooter to me and gave me cash for a crypto transfer, or I was able to use the crypto wallet almost everywhere. So I was paying everywhere with my crypto wallet, not because I was trying to be fancy and try this new stuff. Simply, this was the only way for me to do it. But if Buenos Aires is too exotic for you, this summer I was in Sicily for vacation with my family. And the same issue, like I was trying to withdraw some money. I had to pay in cash for my apartment. I needed cash for some other stuff. And suddenly all my ATM said, hey, like you don't need that much cash. How about we give you like half of it for today and maybe come back tomorrow. Or how about like, we charge you like 5% on your transaction. Because like it's Wednesday, that's why we are doing this.
Makes sense.
Yeah. And suddenly I realized that my crypto card that I had at the time, it had the best conditions. Like I was able to access the most money and in the most comfortable way. And at the same time, my money on this crypto card was earning me like 4.5% yearly interest whilst being liquid and being available all the time. So the reason why I was using it was not to be crazy, not to be, fancy, but simply this is a better product. This is a much better product, which is also established on traditional rails. But I know what's happening there. Like or at least partially knows. As in, there are some things that are still unclear. Like at least I know where my money sits. I can block it. I can block it from my bank if I don't like it. It's crypto rails, so I'm using it in the traditional ways to withdraw money, but I am in control. And if they decide to reject my ATM withdrawal, I can always send it using crypto rails somewhere else. So yeah, like in my opinion, while the tech is ready, we have a lot of things that are unavailable and impossible to implement in traditional finance. But the regulatory environment needs to keep up, and that's what's happening right now in US. At least that's we are hoping for, and how it looks like. That US is trying to speed up the game and adapt themselves to allow for crypto, because they realize that either they do it and they do it first and they own this market, or they will find themselves in a market that is using crypto and they are not ready. So yeah, like I think that a lot will change in the
Krzysztof
next
is such
few
a
years.
fool. I don't understand. How can you be so optimistic? Okay, the tech is not ready at all. Like, please go and try doing something on chain. But most of all, Emmanuel is asking where's adoption if all this stuff is so good. And I think we are a very non-representative sample, both you and me. And even like I was talking about the thing with the wire that got blocked. Like I'm a nerd and I'm in this for the risk and whatever, right? I know what I'm doing, and yet I did not realize the extent to which things could go wrong. I'm sure, like you, knowing your thing, might be able to make this deliberate choice of withdrawing 100K in cash in this weird, crazy country. But I think this is a non-representative situation. And at the same time, to make a Steelman argument of this, and what I find is interesting in crypto is the fact that such people, such non-representative people, would, if they wanted to, be able to block the bank out of the funds. Would, if they wanted to, be able to send this guy a on-chain transaction. This changes the power dynamic, and I think this is the good thing. Like this change, it's like encryption by default, HTTPS or WPA3 by default. Because there's those nerds, or because there's those enthusiasts, that changes the dynamic of how much power the bank holds. And if the bank knows, oh shit, if I upset too many people too badly, then a couple of enthusiasts or leaders or geeks will emerge and they will circumvent me and guide people to circumventing me. I think that is good for the everyday user in the end.
It's not just about upsetting somebody. It's simply like, I think that, upsetting somebody doesn't move the needle. Like corporates tend to upset a lot of people all the time, and we are very bad at coordination as customers. However, what I think that will move the needle is the flexibility of crypto and the things that can be done that cannot be done right now in traditional rails. And there are there's a multitude of examples. Like the one of my favorite is streaming money, something that is obvious and was available in crypto for years now. Like imagine that I would like to send you, 5,000 zlotys, but not as an instant transfer, but like it will be streamed to you for the next 2 months. You can't do it in traditional finance. It's impossible, like technically, practically impossible. Of course, they can tweak it to make it work, but like they have no it's hard. It's expensive for them to make it work. In crypto, we have it. We just have it. It just works. Or permissionless escrow. Again, very simple primitive, which if you try to buy a flat, you know that how complicated it is and how risky and how tricky this process is. And with something like permissionless escrow, if we had all things digital, it could be possible just like that, using these things that we built in crypto. It doesn't have to be even called crypto. But we've built a lot of things that you say that the tech is not ready. In my opinion, you overestimate how bad crypto tech is because you don't know how bad traditional tech is.
Well, I'm thinking about the end user experience. I'm thinking about, say, Emmanuel going and trying to get a ticket for a conference in crypto. Like even today, he will have a hard time. And even today, when I go to Buenos Aires, sure, I can pay with Peanut, but I still, if I can, I prefer to pay with the credit card, but because the UX is better. And correct, I can't pay with credit cards everywhere, and I can pay with Mercado Pay, Mercado Pago almost everywhere, but still, the UX
I
is
disagree
subpar.
I disagree. So UX with paying by card is of course, like some just paying is probably simple because you can just
Yeah, exactly.
you can touch the
and that's
card.
a huge difference.
Yeah, but like, do you know how much did you pay? Do you know if what?
I don't
what,
care.
Right?
I trust them.
If you cannot
No,
care about how much I'm paying, then
Okay,
I envy you.
I see on the screen it's $5, and I don't care.
No, you don't. You don't.
The
Because,
vendor
like,
pays
sorry.
a bit extra.
So what do you mean by that? That you
Wait,
don't
sorry,
see?
you don't see, because like that's the thing. When you are paying with your credit card, usually you don't see how much they actually charge you, because they decide when they will actually convert the money. So they will block some amount, but that also doesn't guarantee you that this is the amount. I travel a lot abroad, and I used to work abroad for many years. And I remember when I was paying with my Polish credit card in Paris, actually, because and I was the same as you. Like I didn't think about it twice, because I just touch the card, it works, I'm happy. Usually buying coffee or a burger is unlikely to bankrupt me. But then after a few months, for some reason, I checked my statements. And when I saw how much money I lost on a stupid, rates that were always picked, not in my favor, like this is how Revolut became a thing. Like right now, we don't think twice about those rates, because Revolut changed the game. They entered the market saying, "Hey, how about we offer fair rates, and this is our unique advantage." And I remember many years ago, I was this meetup in Berlin with banks and neobanks, and somebody asked, and this was the exact moment when Revolut became a unicorn. Like this week when Revolut was announced unicorn, and somebody asked those bank executives, why didn't you invent it? Like, why didn't you create this product? You had everything. Like it's a no-brainer for you. Like you don't need to do anything to have such a product. And they said, but in our case, in order to build such a product, we need to fire a whole department of people that depend on us making money on those stupid spreads. So it's a political decision, not a technical. But coming back to crypto, I don't think that Peanut has a worse user experience than credit card. Actually, quite the opposite, because it's so transparent, it's instant. I immediately know how much money did I pay, not how much money I have reserved for payment later. And I know that if I don't approve another transaction, nobody will charge me more than I just approved.
Yeah.
And
okay,
I mean,
we can argue. We can argue about the UX, etc., and we can see like how much of a difference it makes if I'm charged 4.99 or 5.01. And yes, I do indeed compare the QR code Peanut experience to Revolut, and I don't like Revolut at all. So maybe this is a weaker comparison because they are closer. But what I'm saying is the UX, the user experience for the end user, is better.
So,
and yes,
speaking about UX,
there's risks and maybe you overpay, right?
Let me give you,
but that's not UX.
Let me give you my example of UX of current finance, infrastructure. I need to withdraw 2K euros today, more or less, like 2K euros.
I'll follow you.
To pay for something. So in order to do this, like I can't do it in the ATM because there are limits that disallow me to withdraw that much. It's an
2K
iPhone.
euros? You get a limit for 2K euros?
Yeah, of course. You have to do it like in 2 days because like it's too crazy to do it one day. Like if you want to buy an iPhone, it takes
2 days.
It's a whole adventure that you have to go through. And not only that, but it's okay. I decided, I will go to the bank and I will withdraw money from the bank. So I need to go to this brick and mortar department that is in Warsaw because like in Grodzisk there is only one. And in the neighborhood, there are none. So people who want to do it, they have to travel. So I have to travel today, and I need to make it until 4:30, because a lot of people don't work. People are known for not having work, so they have time to be at your bank before 4:30, so that they can they can withdraw their money.
If you miss it, you pay a penalty.
And by the way, it's quite possible that I won't be able to withdraw as much as I want, because when I was in my other bank last time, there was a guy who wanted to withdraw 2.5 K euros, and they told him that one day he can do only 2, and he need to come another day for another 500. So this is the UX of traditional finance, and this is crazy.
Yeah.
Like, how did we end up in this world?
It's
and
crazy.
It's only over-regulation and only, simply bad setup and bad UX, as you mentioned.
Yeah, so I think it has a lot to do with regulation and monopolies, etc. But I think what you said earlier is maybe even a more relevant or a stronger point, and that is the fact that with a crypto rail-backed system, an enthusiasm such as Krzysztof can say, I rage quit you, the Neo2 bank provider, crypto bank provider today, and I'm moving to a competitor. I'm starting my own competitor. I'm sending manually a native transfer. I think that has this effect that you would no longer be found in a situation where I was just complaining about Revolut. I hate this company, even though it seems to be the least evil and bad one. I really dislike them. And what you said earlier is very adequate. Like, we are very bad at coordinating around responding to upsetting corporate actions, right? It's very difficult to get my friends and all rage quit Revolut together, and they have all of the staying power, and the accounts and credit cards are saved everywhere, and so much effort that even though I am quite principled and idealistic, I don't bother to do it. But with crypto rails backed systems, it would be so much easier. Like, things would be modular, in fact. So I could have one just credit card number maybe provider, and another credit card physical provider, and another credit card rules and whatever else provider, and I could just plug them together in a way that I should see fit. And so there wouldn't be the staying power of a big but bad corporate player.
And also, I think that crypto is lowering the marginal cost of innovation in finance, because it's, because people like you can experiment building on top of it. You don't have to be bank engineer in order to experiment with this. So I believe that the secondary effect will be that all those institutions will be able to compete with each other based on the product itself, because the cost of implementation of technological implementation will become lower. Right now, I used to sell to banks, so I know how much software company charges for anything, really, and it's not cheap. Let me put it like that. So being able, and this is really limiting for any executive in financial institution, that if they want to, let's say that they have this brilliant idea that they want to provide a product to their customers that is doing this and that. But if this costs 2 million euros to figure out whether this is something cool or not, then probably they won't get acceptance from the board to go forward with it. But if this is something that could be like a weekend project for somebody in the company to check it out, then maybe this is better. And, right now the cost of development is becoming lower and lower thanks to our AI overloads. We are able to develop stuff definitely much quicker and cheaper than it used to be. So we can develop more. And with crypto, we can develop more things that are dealing with finance and value. Like, because finance is not the end goal, in my opinion. It's just simply the lowest hanging fruit for the product market fit.
Which is often, fortunately, unfortunately, what seems to be making, at least from an external perspective, the fate of crypto, right? I mean, the market and price signals, is something price-wise increasing or not? It's interesting. On the adoption side, another point that we haven't really touched that seems to be also having an impact is not only the adoption as opposed to traditional finance, but also the adoption to protect yourself from financial state policies and central banks, for instance. If you look at, we're in Europe, where we know the US markets well, but there are also markets where there's no financial stability. The monetary value of what you own is fluctuating quickly, and you have countries in, whether it's, for instance, Nigeria, India, South Africa, where you get a lot of services that are being paid. In Soweto, a neighborhood in South Africa, you actually have the sewage system and the garbage collection system that is being paid by in a shanty town by the people, by the users with Bitcoin. Or at least it was the case at some point a couple of years ago. So that's also something that is interesting. If you look at now from the adoption perspective, still, you mentioned, Krzysztof, that one of the elements that is missing, or was missing until recently at least, worldwide, was regulation. And now the US is starting to regulate. We've seen this last year with the Genius Act. We're seeing it with the Clarity Act. In Europe, we see this initiative with MiCA. What is your perspective? What is being done? Is it enough? What do you think?
No, in my opinion, it's just the beginning. So
Okay.
it's clearly absolutely not enough. Because it just started, really. If you asked me 2 years ago how I'm looking into the future of financial regulation in crypto, I would be things are bad. The change in sentiment in US really made all the difference. So yeah, let's maybe not dig deeper into this, but like the world changed last year in terms of crypto, like crypto sentiment in traditional finance and in general. But it's just the beginning, and I think that crypto gives us the opportunity to rethink some regulations. Simply when we have to create them from scratch for crypto, it's quite good that in some cases we are not just trying to fit crypto into traditional things that we already know, because they are different. They should be treated differently, probably. And my favorite example of regulations done weirdly is I remember like 10 years ago, I mentioned this studio, right? So 10 years ago, I bought myself a small digital camera. It was before iPhones were so great. So I bought myself a small digital camera that I wanted to use to record videos, podcasts, stuff like that. However, it had a limit for, I think, 20 minutes or 30 minutes of how much it could record. And I was like, why? Like, why do I have to come to this camera and like click again to continue recording? Like, it's stupid. Like, why did they design it like that? So I checked. And apparently, this is because of regulations. And this was because those digital cameras were treated as as an amateur photomakers and not digital cameras, because digital cameras was those serious big things which have to cost a lot, and there are some
So they pay
taxes
for the
involved.
lobby with the government.
So there are some taxes. No, actually, it was that because there was some tax on those big cameras, the small producers that were imposing this limit, so they are not treated as such. So and because of that, a lot of people had their recording lost or broken. So many bad effects were just due to bad law and bad regulations, because we are very bad at maintaining regulations and maintaining law, basically. So I think that what needs to happen, like the revolution that needs to happen in order for us to be able to make use of crypto more, is we need to become more agile in terms of how do we think about law and how do we think about regulation. It's no longer possible to think about it in terms of like 10-year time frames.
Agile and law in the same sentence? Forget it.
But that's the thing, that we don't know how to interpret crypto. A few years ago, I was trying to build a startup that was supposed to allow people to buy art, like traditional art, paintings, sculptures, things like that, but using NFTs. Because the whole idea was that there is a lot of people who have a lot of money in crypto and they want to buy art. They were, this was the NFT top. So they were buying monkeys for crazy amounts on the internet. However, they wanted to buy crazy art. But for them to buy monkey, it was like they went to OpenSea and there was a buy now button that they clicked and this was over. And for buying a painting, they had to, first withdraw their money, do some bank account, then go to the gallery, then sign an agreement, then you organize all this stuff. Like, this was a lot of hassle for them. and they didn't want it. Like, why would they want it? So the idea was, okay, let them buy an NFT that would allow them, like, it would be your ticket for a painting. So if you've got an NFT, you can collect the painting, you can arrange delivery, whatever, but you buy it instantly, one click, on the as an NFT on the internet in crypto. However, and everything like this is a very simple thing to do. However, when things got complicated, and what became a deal breaker there was, how do you actually interpret this transaction in tax, reasoning. And I got two very prominent tax lawyers, like Polish lawyers, fighting about it in on one of the conferences, because it's not clear. Are we buying a token, or are we buying art? If we are buying art is not, again, totally unregulated. There are some limitation on what you can do when selling and buying art. So what exactly are we doing here when we are buying an NFT that represents your right to some art? Um, and that's where I say that we need this agility, because this is a solvable issue. It's not that I like when I was trying to build a startup, I wanted any interpretation, really. I didn't want like the best interpretation for me. I didn't want an interpretation that would say you don't have to pay taxes. I wanted an interpretation that would say you need to do this, this, and that. And if you do this, you're good to go. And if it changes, we'll inform you beforehand so you can prepare. It doesn't work like that. And that's the biggest issue for many people to work on these new technologies. And it's not just crypto. Most new technologies, especially anything related to money, that's why those things tend to go places where this regulation is better. That's why Switzerland used to be, the mecca for crypto people in Europe, because they were open for discussion. They were open to work with people who wanted to do business in crypto and find ways for them to do it. That's why all those exotic jurisdictions, because it's possible simply.
I agree. Clarity is super important. And I'm worried that it's not just about clarity. And another example I wanted to give is the situation in Poland until just recently there had been clarity that whenever you send any transaction, this is a taxable event as well. Like whenever you swap one token for another, you need to report all of these. But also, it is true that it had been known and clear, clarity, that you had to pay a tax on the nominal value of each of such transactions, I think 2% or something, which is of course obscene. It doesn't make any sense whatsoever. If you can think about this for maybe beginners, you can envision it is as though every step you are making whilst walking on the street, you need to pay 1 cent. Like, it doesn't make any sense. So yeah, it is good and important and necessary to have clarity, but also it needs to be somehow reality compatible. It needs to be somehow adjusted to, I think, what you said before, the fact that crypto is different. That in crypto you can be making 1,000, 10,000, a million transactions per day as a normal user. Whereas in traditional finance, you wouldn't be selling 1,000 houses a day, which is where, as far as I know, that idea for that 2% tax came from. It's for, like, you sell a car, you sell a house, you pay 2%.
Yeah. So, but I remember this exact situation. I was actually working with the government back then on some things, and this was the way I remember it. It was kind of an accident. They tried to simply unify the law across different different areas, and they instantly withdrawn this when they realized that this is going to kill this.
But instantly, you mean 2 years later?
No, like this
Really?
this thing was withdrawn like after a month, because this was
Okay.
it was in 2018 or 19 that it was proposed. So, but at least this clarity. I prefer clarity that says you can't do business here, because like that at least makes it clear that, okay, I can't do business here. I have to go somewhere else. That's the reason why I'm going somewhere else, not anything else. But lack of clarity is, why aren't you doing business here? Well, because I don't know if I can. Like, I don't know if I start doing business here and I will invest here. I will spend money, and then suddenly I will learn that I can't do business. So that's in my opinion, that's worse than even bad clarity. I prefer bad clarity over lack of clarity. In my opinion, the reason why I think that bad clarity is better than lack of clarity, because like bad clarity is something that we can fight with.
Yeah.
Lack of clarity is something that like, we are asking, hey, please do something. Please provide some explanation. And with bad clarity, at least I can argue that, okay, I can make arguments why it is bad.
Okay, so we talked about adoption. We saw that UX is an interesting aspect of it that could be potentially improved. Same thing with regulation. In terms of adoption and use cases, we talked about how quickly and how many transactions you can do in a limited amount of time, thanks to crypto, that you cannot do in traditional finance. What are the other things? I'm thinking especially about the general audience that may be listening to us, watching us maybe today. What are the other things that you would suggest to someone who's entering or getting interested into the crypto scene or space to look at, to basically get a better idea of the possibilities, not only money-wise, but technology-wise? I'm thinking things like blockchain, tokenization, other examples that you may have that struck you as something that we should look into because there is a use case there that may not be as developed as it could.
So it's a tricky question. And the reason why it's a tricky question is there is a lot of possibilities. However, if I were to name, exact things that you can do right here, right now, then I agree with Orest. A lot of things are not ready because and both from technical and from regulatory perspective. So, like for the general audience, what I would say is definitely inform yourself on DeFi and inform yourself on crypto in general, on how it works and what is available. Because first of all, you will have to face it one day. I absolutely believe that 5 years from now, you will have to understand what's happening there anyway. And second, like there are some opportunities in crypto that exist already. You don't have to invest all your net worth. You might want to do something simply. For example, for some nice API. Usually you can have a crypto debit card, for example, and have your money sitting at Aave for like 4% or something like that, and be able to spend it instantly. So show me a bank that in Poland that gives you 4%, and I would gladly sign a contract with them. Like my bank is giving me nothing.
Revolut gives you 5%, but you can't spend it
fees,
out of the thing.
Yeah, so you mentioned that you hate Revolut.
Oh yeah,
like, I actually like Revolut. I'm an ultra user. So yeah, like Revolut is one of those things that offer this, but like those traditional brick and mortar banks usually don't. But this is something
Revolut,
that you should.
Like you don't have this full composability with which what you can do is you can say this card taps into this savings account rather than this card has got to be attached to my primary account. I have no way of changing that. And I just happen to have a savings account from which I need to remember to move funds.
Yeah, I agree.
But I think if crypto is successful as an industry, then it's not true that you, the user, will have to, the general audience participant, will have to look into it in 5 years. I do believe that it could very well remain in the background and you could have no idea.
And the reason being is that right now Revolut is two things. One is this app, this interface that you use, and the other is this whole infrastructure that keeps your money in some foreign account and allows you to transfer money. And we want to, if we move the second part, crypto, to some crypto rails that will make it universally available, then you as a user, like you as a developer, would be able to create a alternative interface for Revolut. Why can't I create an alternative interface for Revolut or alternative interface for my bank? There was, by the way, this the whole premise of open banking 10 years ago was to enable this, but it was buried in regulatory requirements and stupid limitations for the PSD standards that simply made it not worth it. But like, why can't I make a better interface for Revolut? Everybody can make a better interface for my Aave or my Gnosis card. And some did. The default interface is not great. So somebody made a better interface that allows me to have my money on Aave and spend it with Gnosis card just on the fly. So these things should be available. These things are available in crypto if this backend infrastructure is powered by crypto. So That's the premise, I believe. However, you ask about other options. I think that a lot of things could be done. Like I mentioned, games. So there is, first of all, any game that's doing any kind of internal economics have to right now reinvent it themselves and create it all by themselves, which I believe that in the future it will be subject to scrutiny, regulatory scrutiny as well, because right now it's kind of a gray area. That you have some, you have some coins in your game which you buy for money, and you can sell it to other people for something like, let's say, a sword or something. But somehow we don't treat it as money. I think that it will be questionable, especially that there are games that are made, there are games, and there used to be games 15 years ago that were processing a lot of money. And if you go to Allegro, you can see that there are people who are actually selling resources from these games and making serious money on it. I like 15 years ago, there were already future contracts for resources in EVE Online. So the only reason why this is not subject to more scrutiny is that simply all those people responsible for regulatory environment, they do not play those games, and they are simply unaware. And people maintaining those games are not interested in, for this to be more publicly known that they are making so much money on it. However, right now all those economies are walled gardens. I believe that in the future, if crypto is becoming more user friendly for developers of like traditional developers, then they might simply plug in something that already exists, and they will be doing this not to use crypto, but simply because either they have to build it internally and secure it internally and make sure that everything works internally, and that the database is replicated, and they will pay for this replication in order to make sure that they don't lose people's coins, and they will have the choice of just plugging in this on crypto rails, and will be an obvious choice, especially for indie developers. So I think that this will be a big unlock at some point, even without any like crypto crazy mechanics. Just like this will be a library that they will be using. So this is one thing. Another thing is that I believe that a lot of, again, like, but this is like I'm hesitant about saying this because this is something that we've been saying for 8 years now, and it didn't materialize yet. But a lot of private P2P value exchange could be happening on crypto for many different things. We have those like bets. Bets are pretty hot right now with Polymarket and Kalshi. But like, if I want to make a bet with Orest, then we don't have that much choice right now. I think that it's possible in crypto. However, in crypto, the most popular escrow is a guy named Kobe, even though we have all this infrastructure. But this is something that could be possible, and I think that.
A separate question: is it good? Is it good or bad that it becomes possible
No, I
to
think
place bets more easily?
I think it's good. It's like bets is one thing, but simply like value exchange between people for many different contracts whatsoever. Right now, right now, it's possible, but all such things are tied to legal structures that are expensive and complicated. Most people simply do not have access to it, and tech can open it.
Mm-hmm. And in terms of tech, just to follow up on that, I understand that you're thinking smart contracts that would
Yes.
allow to automate basically and have a trustless platform.
Yeah, because there is a saying in crypto circles that code is low. However, I think that it was misinterpreted, like not misinterpreted, but like at first we said that like we were saying code is low as in whatever is possible in code, whatever code allows should be allowed, which is bullshit. Like we know already that it doesn't work like that. In that terms, code is not low. However, I believe that the opposite of this sentence could be true. Like low could be code. Low could be codified. And instead of me, because like right now, low is simply a social agreement that we, agree to do something. But then if things go wrong, we need to go to the court and, fight for it for 10 years.
No, it doesn't work for the exact same reason as code as law doesn't work. Because it's a feature of law that you be able to use natural language and that you have ambiguity and that you have the option to go arbiter, go to
but there are things that
judge.
could be that could be codified. For example, let's say that we say that we share some, that I give you money and you share 10% of the revenue that you generate. This could be codified. This could be programmed.
Well, even better is to program it so it's not possible to cheat.
Yeah, exactly. That's what I say.
Okay, I see.
That's exactly what I'm saying.
That's great.
That a lot of things that right now we need to exercise in court because it's just a social agreement that's on paper, which is securing us, but only in this specific legal structure. Those things could be codified. Things could be programmed and enforced on chain, which could simplify a lot of things.
Yeah, you could basically say that a lot of crypto, or maybe even beyond, use cases are arbitrage, and many people use this as this startup is just arbitrage. But to me, this is huge. Like being able to arbitrate away the hurdle, the high barrier to entry, which is having to establish a legal entity, hire a lawyer, hire an accountant, hire this and that. That's huge. Like to me, that could very well propel a new economy.
Yeah, like I remember when I was young and I was doing my first jobs, low-paid jobs, but I was always worried: will the person on the other end will they pay me? Because I was in a position that if they decided not to pay me, I wouldn't be able to do anything. Like, yes, I can sue them. How we know how silly it sounds, but this could be optimized in a way that we could legally oblige those people hiring those young people to lock the salary, for example, in some contract that the person on the other end knows when they will be able to unlock.
But could we? Like, that's the big problem with crypto, and I think that's widely misunderstood, even in crypto. The crypto is just as good as the data it has on chain, and so the fundamental issue is how do we bring on chain the decision of whether the young Chris made the job or did not make the job like it was supposed to.
But this still can be done off chain. But the thing is that I would be able to know that the money is there, and if there is
but that doesn't give you security.
Of course,
like
it gives me
still to do the job in a way that convinces the oracle.
It gives me a security because I had this experience that I did the job. And I did everything okay, and I fulfilled all the requirements from the legal agreement. But simply the other guy didn't have the money,
and he was insolvent.
I learned about it only after the fact, and he was a very serious VC, entrepreneur. So this is something that could be easily solved by that.
Okay, so that's an interesting use case and how we could use, for instance, smart contracts to make our lives easier. Basically, maybe a last question. To open up to the future, how do you see the future of crypto in 10 years, but also long term? How do you see it fitting in the current traditional finance block, let's say, that we're still using, banks, etc.? And to which extent do you think that it will really change our daily lives?
I can start. So I believe that like 10 years from now, I believe that crypto will be mainstream, but most people, we won't be even talking about crypto. And I actually hate when people say like that because it sounds like crypto should be irrelevant. But no, like it will be all done under the hood. And the difference will be that a lot more will be possible. You will have much more choice in terms of what you want to do. But those things will be running on crypto rails, many different crypto rails. So banks won't disappear. Financial institutions won't disappear. There will be new ones created utilizing this technology. And simply, it will be much easier to create a successful financial company from scratch, because a lot of guarantees that are right now provided by legitimacy and simply someone having a lot of capital or someone having a lot of social capital that allows them to be even approved to be dealing with finance. This will be provided like guaranteed by the code. This will be like there will be programmable guarantees that would ensure that these people cannot steal your money. Therefore, they are able to offer you the like new financial products that are in some way transparent. Of course, in order for this to happen, we need to enforce transparency, which is a separate topic that it's easier said than done. That's why companies like L2Bit exist. Because there is a huge demand and not enough supply for this. But if this will be possible, if we are able to push for those transparent protocols, then a lot more will be possible. So and a lot more of financial activity will be moving to the on-chain rails, especially things that are really not very effective right now. So like I believe that a lot will be done this year in terms of cross-border payments. This is like the obvious use case that was obvious like 5 years ago that we will end up doing it. Also, intercompany balancing of accounts. This is something that is, in my opinion, another huge use case that could be simplified and optimized with crypto. And actually, this is already happening, but we don't see it because it's in Asia. But if you wonder why does Tether have such a huge volumes in the world, it's not just people withdrawing money in Africa. This is actually a lot of Chinese companies using this internally. I learned it from the conference in Singapore in 2019 when at that time CEO of Huobi Exchange was explaining how they are onboarding companies at scale because they want to use Tether. And it was 2019, 6 years ago, so 7 years ago almost. This is already happening there, and I think that the world is ready to adopt it. Of course, all those intermediaries that we have right now won't be gone because, as I said, like tech is not everything. The whole product is bigger than just tech. So they will stay. They will be able to optimize their costs by using crypto or offer better pricing to the customers because they will lower the costs using crypto. Things like that I expect to happen. So I expect them adopting crypto because they will see the opportunity on optimizing the revenue on their own side. This I actually expect to happen in the next 3 to 5 years, not 10. In 10 years, I believe that there will be a lot of automated value movements in the internet, and crypto will be called internet. As simple as that.
Yeah, I think this is similar to my vision. I think I view the state of adoption as a slight bit more pessimistically than Krzysztof. I basically think that we are currently in this moment of a late, early adoption stage in this like adoption curve, and I'm coming from the user perspective here and thinking about my mother willing to buy a ticket for a concert, not being able to do so. And this is something that my company is trying to solve as well. And I think we are at the moment where a lot of consolidation is about to happen, where a lot of those maybe last mile UX issues are about to be solved or about to be solved sufficiently for crypto to enter this middle stage of a life cycle. And this I envision in a parallel to email, basically, where in the early days you would have like this like idealistic thing, or let's have like decentralized email servers and everyone runs their own SMTP and POP3 and whatever. And then we had the scams and the Nigerian prince willing to give you 1 million if you send him $100. I think this is the stage we are exiting now, and we are entering this new stage with some sort of recalibration and down to earth grounding again, where it's no longer going to be the most important thing to have a big 100 pages long white paper. We have one too, also 100 pages. But it's no longer going to be the most important thing. It's going to be more of a nuisance and detail somewhere in the background. And it's going to be less important to be relying on this trustlessness to a completely pure extent. Like ZK used to be, I would argue, verifiability above everything else, code is law kind of approach, and way more pragmatic and a common sense, I would argue, approach of the Gmail with a good spam filtering.
Yeah, so like the way I believe that this adoption is going to happen, to give you an example, is like right now when I'm sending a transfer from one of my accounts in one bank to another account in another bank, it takes me half a day. Like if I did a transfer right now, I would receive the money on the other end probably late evening. I believe that in the future, and there is a reason for that. There are many reasons. Like one is the AML requirements, because like nobody knows that this person on the other end, it's actually me. The one bank doesn't have cannot know that it's me on the other end.
Which is an inefficiency, right?
Yeah.
It doesn't.
And
It's not necessary for
exactly.
AML.
And the other is this settlement, like interbank settlement that happens, that needs to happen, and it's like slow right now. But I believe that in the future, both of those banks will have stablecoin accounts, and they will be able to confirm using zero knowledge proofs that I'm the same person on the other end. And they will be able to issue this instantly. I'll be doing this the same way as I'm doing this right now, like simply sending money from one bank to another. But under the hood, it will be done probably using stablecoin. And also, it probably will be done on the public network because at some point those companies will realize that instead of paying for their own infrastructure, that could be using the public one. The same as instead of using their own intranets and maintaining their own servers, they can use internet or cloud. So I believe that's what's going to happen. So you will probably not notice. You will notice that you have a lot more options in those financial applications, but those options will be built on crypto rails.
Great way to finish our podcast. Orest, Krzysztof, thank you so much for sharing your views, for sharing your experience. And please, to the audience listening to us, if you're still listening, congratulations. And we hope you had fun. We hope you found it enlightening, that you gained some knowledge. And please continue following us on LinkedIn, on Facebook, also on our website. We're planning a lot of very exciting events this year, and we'll have more talks like that in the future. Thank you so much.